Hello and welcome to this webcast from Guernsey on a beautiful day in early June 2011. We are delighted you could join us here this afternoon. This is part of our 2015 project. We're going to be talking about the future of Guernsey from a variety of different points of view to 2015 and beyond. And with me around the table, I have sitting at my furthest right here, Patrick Firth, who is an independent fund director based here in Guernsey. Patrick, I think you've been based on the island for a good number of years.
21 years now.
21 years, that probably qualifies as calling you a local by now, I would have thought.
Almost.
And on my immediate right is Ben Morgan from the law firm Carey Olson, a well-known law firm based here in Guernsey. How long has Carey Olson been in the fund business, Ben?
Over 100 years.
But the fund business hasn't been around 100 years.
Not quite. No,
but
30,
right from the beginning.
About 30 years.
Right.
Yeah.
And on my immediate left is regular various of our round tables. Mark Huntley, who runs Heritage here in Guernsey. And I think you've now been here long enough to almost qualify as being a local too.
1974. However, my wife makes it quite clear I've got another 300 years to go, which I'm sure Ben would support. But yes, it's home.
And sitting next to him is Joe Truelove from Kleinmort Benson. Again, someone who I understand has been here on the island for a long time. And Kleinmort Benson has been based in Guernsey for quite a long time too, and recently formed a link with Close, am I right in saying?
Yeah, that's right. Kleinmort Benson has been established in Guernsey for 48 years. I've actually beaten Mark. I've been here since 1972. And yes, last week, very importantly for us, Kleinmort Benson finalised the purchase of the Close Offshore Group, adding 350 staff to our business across Guernsey, Jersey, the Isle of Man and Cape Town.
Right, excellent.
The greatest difference will be by 2015 we should probably better understand the implications of the AIFM directive and its implications for Guernsey, because of course we're still waiting. As you say, it's better for Guernsey, but we're still waiting for some of the level 2 detail to emerge. We will know how things will pan out in terms of how funds will be structured. So will a lot of the fund promoters decide that actually they want to be entirely outside the EU and actually have representative operations on the island, so to be outside rather than to be within the EU. And we will know by then just how damaging the directive has been for European managers trying to operate within Europe, and you know what, if any, by then will be the exodus of managers actually looking to operate entirely offshore. And I think we are certainly well positioned as an island to accommodate a lot of those promoters that may currently be operating onshore.
Because there's the other side of the coin. It could turn out to be paradoxically a great advantage.
It certainly could.
I want to come back to a little bit later in this particular discussion. Patrick, can I ask you the same question?
I think the AIFM, it dominates things, or has done up till now. So I think what Ben's saying is very true. I think we do need to see more clarity on level 2, and once we have that, then we'll be in a much better position.
Mark, last but not least, what do you think will be different about Guernsey in the year 2015, both from the fund administration point of view and the overall...
And a wider perspective. Starting with the fund administration, to answer your question, that in that order, I think we will see a greater move for entities domiciled in other jurisdictions to base their administration here, particularly their management and control. As you know, it's been a long-standing theme of mine of peripatetic management being the weakness of a number of fund structures, and I think Guernsey's strongest point has been, is, and I think probably will remain a strong focus on corporate governance. I think we do it right as a jurisdiction. And I think the changes that Joe talked about of the non-Guernsey scheme rules, if we can get that process properly structured, I think that could be very, very good for Guernsey as a base for doing it right. There isn't infinite scalability, before you ask the question, because I know you would.
I'm going to come to that.
That each of us has found our respective solutions to both scale and structure. There are a lot of different approaches to that, and so that's not an obstacle. That's just which solution you choose. But what it does allow Guernsey to focus on is that management and control, which I think we are good because of, we're in our 4th decade of fund business, and that has to count. We're not a Johnny-come-lately in the business. So from an administration point of view, we see that growing. I think the second part is we could well see a greater growth of physical presence of management groups in the island. We have such arrangements hosted within our business, and it's interesting that those types of discussions have increased. Not easy to manage, but I think it's a feature that's growing. Equally, you've seen some spin-outs from what were third-party fund administration to create self-administered. That, of course, is a slight problem, and
can you just go back on that? Because I'm not sure I fully got that.
Well, I think there's a point where a group might reach a critical mass where they've probably got a team of 8 or 10 people within an administration business where they're saying, well, actually, we could do this faster, better, cheaper ourselves. The reality is, of course, the very case for outsourcing your fund administration is the fact that you have cover, you don't have all the holiday issues and all the challenges of IT, business continuity and everything else. So that's an interesting mix in terms of decisions, but instinctively, in the private equity and hedge fund business, they want to be in control of their own destiny. So we may see more of that management GP structure being more formalised and more people being actually based here in Guernsey. Not an infinite number, but I think it's a feature if we're looking out to 2015 I could see. Particularly if you ally it into AIFM. I'm not sure I'm quite with Joe in terms of the fact that the duality of an AIFM regulated structure and a non-AIFM compatible structure is the panacea to everything. I think I share the concerns you're raising about AIFM, as we said before, is a politically driven process. It's got very little to do with the actual nuts and bolts of what happens in the alternative fund world, because those of us who are very close to it know it actually is driven, as Joe says, by the pension funds and the very large institutional investors who really call the shots on these things, and for whom they have lawyers crawl all over it. There is no real investor risk in those vehicles. Quite the opposite. They are very, very investor controlled. But I think AIFM, I would like to say, I thought some common sense crept into the process. I was relieved to see that, but I think level 2 will be the detail. We've taken our own view and said we think, and it's maybe sort of halfway between the two in terms of answering your question, we want to provide fund promoters with a duality of option. So we've done our first private equity fund, which has a dual Malta Guernsey structure, and the first closing of that was a few months ago. We're seeing a lot of interest from lawyers in that option, because you've got one common administrator, and you're not arbitraging between the jurisdictions, you're just providing investors with a solution. We also see potentially there may be components as regards to the UK that may go back onshore, and again we've opened an office in the UK to accommodate those changes. So I think the changing mix might appear in the way business flows through, but the reality is the quantum of business in Guernsey has been steadily growing over the last 6 to 12 months. I think it takes longer to raise a fund in this environment, but I think the trend is now back on a pretty positive note. I think the final part, to just move on to where our future lies in continuing sensible relations with Europe and the UK. That's where historically our professional connections are. But where our growth may come from is cultivating the arrangements we have in the Far East. And I think, again, that's not a new theme for me, but it's one that increasingly I feel with AIFM could well do exactly what the EU Savings Directive did and drive wealth out of the EU and into the Far East. And the coffers of Hong Kong and Singapore must be saying, carry on, boys, because it really is not good for Europe, in my view. And I think we're opportunistic as an island, and we're opportunistic as professionals within that island. And frankly, we will continue to service the underlying investors, and that's what we're here for.
Yeah. I'm going to at least attempt to ask this question from the point of view of getting an honest answer. Is there anything that will be worse in Guernsey in 3 years' time, that will not be as good in the future, or will it all be better? Is there anything that worries you out there? That is there any potential negative? That's a better way of putting it. Is there any potential negative out there that could come along and eat your lunch? Since we have this level 2 AFIM issue to be resolved, but as we said a few minutes ago, things are an awful lot better than they were 12 months ago. So I don't think that's anything to worry about. If there is anything to worry about, as I understand AFIM, it won't be until 2018. Many of us might even be retired by then, But is there anything else, with the possible exception of the EU regulatory climate, that could be a negative? No?
I think, external regulation or legislation which has the impact of potentially making allowing a structure to be put together offshore to stop that from happening. And let's face it, when I'm sorry, I've come back to it, the EU AIFM directive came out, that's the first draft, that's exactly what it did. It effectively said that we're not going to make it very, very difficult for third countries to operate within Europe. That, fortunately, that issue has dissipated. It doesn't mean that it is all good news, to pick up on your point earlier, Simon, for Guernsey necessarily, and Mark's identified that there's a good hedge play for administrators to grow their operations so they have an onshore and an offshore offering, because actually most of the expertise, certainly in this time zone, is currently offshore, not onshore. So to export that expertise to onshore jurisdictions seems like an obvious thing to do. But I think it is likely that external regulation legislation like Dodd-Frank and other initiatives, protectionist initiatives onshore, are Guernsey's greatest threat. Anything else is an internal threat which is hopefully within our control. And fortunately, the industry generally has a very responsive regulator that is very keen to impose on us as regulated, or within a regulated environment. It generally operates to a fairly helpful level from a regulatory perspective, that isn't off-putting to users of this island, which means that generally speaking our regulation is sensible. And I don't expect that to change. So, and our tax regime, you'll see some adjustments to, but not in a fund context, other than to enhance what we've already got. So I don't think I do see any other obvious threats. We need to keep doing what we have been doing to date as well as we possibly can, because the environment, I suppose, is going to, well, it will get more competitive.
Are there any particular threats that come out of Dodd-Frank for a location like this?
Yes, doing business with the US.
Yeah.
In any shape or form, whether it's investing in the US.
And that's the same as anywhere in Europe, isn't it?
Anywhere outside the US, yes, indeed.
Yeah.
It's an additional burden of cost, effectively. And that's one of the things that's sort of creeping up on us with the additional layers of regulation which we're obliged to implement to stay at the right level of regulatory standards. There are costs which mean, business isn't easy. So it's not easy to make money doing this business, and I guess it's going to get harder to drive. Margins are going to get thinner, and people are going to have to be more efficient. They're going to have to have, bigger systems, offshore operations, which I know we're going to talk about, and they're going to have to work more efficiently and effectively to offer a high level of service and still remain profitable. So I think it's going to be hard for some operators to stay in the game.
Yeah.
I think one of the interesting sort of consequence of AFIM is that everybody realised when AFIM was being talked about, when it was still quite frightening, was how reliant we are upon not just the EU but in particular London. A lot of our business, again, has flowed naturally out of London. And as an attempt to diversify our business, if I allude to something Mark said, we've been travelling further afield, places like Russia, India, China, the Middle East. And though, winning business in those jurisdictions or from those jurisdictions brings its own challenges, because they're operating in different time zones, they're operating in different languages, they've got different they've got different working hours, even if they're in the same time zone. We're talking to Middle East clients.
Can I ask you, what type of clients or potential clients are you talking about from those locations?
Well, I'm talking at the moment to a Middle Eastern fund promoter who's running Sharia compliant funds, for example, and because they work a different working week, they work from Sunday through to Thursday, they want valuations producing on a daily basis, and they want them producing on Sundays. So people are going to have to adopt flexible working hours. People, there's a 3-hour time difference between Dubai and Guernsey. So maybe we're going to have to open the office 2 hours early. Maybe we're going to have to open an early shift that come in to get the valuations out for the Middle East market. Maybe those of us with offices in other jurisdictions are going to have to work around the clock, so that when people in different parts of the world wake up, there's someone on the end of the phone seamlessly ready to hand over. So I think the globalisation of business is going to be a challenge to all of us.
Can I just pick up on something you just said in relation to that, and also to what Mark said about the future being in Asia, which on one level I completely agree with you on. But most of the fund management companies in this world are based in the US or within Europe, by which I mean the UK as well. And if you look at the fund managers that are doing increasingly well in places like Asia, they tend to be US or European-based firms. So is there much potential indigenous local business out of kind of places that Joe was talking about, Russia, the Middle East, or what you were talking about, Singapore or Hong Kong, wherever it may be, that you can really pick up on in Guernsey as a really future path for growth?
I personally think there is. I mean, I think it's going to be a developing trend for people to want to invest in funds which are managed by other firms in their own country. So if you look at India, for example, I had a very exciting new business opportunity last year, and I joined the Guernsey Finance Group out there as a result of that. That was in India. A Mumbai-based fund manager wanted to launch a Guernsey domicile closed-ended London-listed investment fund, and everywhere you drove in Mumbai, the brand name of this particular organisation was on every street corner. So there's no doubt that they'd have been able to distribute that product in India, but they were looking to use Guernsey so they could get money out of Europe to invest into India. And I think when you're looking at, as an investor making a decision about who to give your money to look after, Mark and I both talked about this already. Do you trust someone who's based in London deciding which stocks are going to do well in China? Or do you trust a Chinese fund manager or a Hong Kong-based fund manager, someone in the same time zone? I mean, you might want a Guernsey vehicle listed on the appropriate stock exchange, or a Guernsey limited partnership with a Guernsey general partner, so keep in mind the management somewhere convenient, central to a global fund. But I think there'd be a grand move for people to move away from managers who are based in the traditional London, New York axis.
You've got to follow where the wealth is, I think, Simon, is probably the logic of where we've looked at it. We talk about it, we cooperate to compete, really, in terms of trying to take the industry forward. But I think the drivers of wealth are coming out of the Far East and India, Latin America, Russia. That's where it is. The easiest appeal, as you rightly say, are those asset managers who have a Western component to their team because they'll be comfortable with the world. But it's going to take a bit of time. But I don't think it's as if the flow to Guernsey has died and therefore we have to move. I think it's about, you're asking us about where do we think things are going to be in 2015 and beyond. And I think as a jurisdiction, as the Guernsey Investment Fund Association, of which we're all active participants in, we sense that we just have to travel further. It's been quite a nice position to take a 35-minute flight to London, or 2-3 hours to hit Europe. There's going to be a few more miles trodden, but 'twas ever the case. I mean, we've been through these processes. I mean, I liken where we are now. Last time I saw this was 1992, 93, where again we were starting to get into different markets and broaden things out. And I think it's, we've always been pretty good at adapting to the cards that are dealt. You add back to the risks. I think the risk is that we get complacent. And I think, I'm not one of those who said, well, what's happened at AIFM is good. We've spent an incredible amount of time as a jurisdiction explaining what we do properly to people who didn't understand what we did properly. And we will continue having to do that. The appropriateness of regulation that Ben talks about, it's really important, one, that we get that right within the jurisdiction. It's even more important we communicate it with the jurisdiction, because there are forces at work both within the EU who would like to sort of distort that picture, but there are also political forces which might also seek to distort that picture. So it's really important that we don't play we're being beaten up as a little jurisdiction story, because I think that has a very limited currency. But it's about just quietly getting about our business. But we have to raise our head above the parapet more and say, actually, look what we do. We really do look after investor interests very, very well in this jurisdiction, no matter who the organisation is. And that should not be overlooked. We're really proud, and a lot of professionalism goes into making sure investors are looked after. Frankly, there's a reason for it, as we've talked about. Some of the investor terms in some of these professional funds are such that you have to, but that's the bar that we've set.
But there's an increasing attraction of that. If you go to these other jurisdictions that Joe's talking about, there is more of a demand for good corporate governance. And the fact that, as Mark said, we've got the experience in that area, we're seen as being very strong corporate governance.
Well, my perspective of what currently happens in the Far East is that they are currently most comfortable in terms of where they domicile their structures, not in Guernsey or Jersey, but actually in fairly far-flung places like Bermuda, the BVI, and Cayman. So most of the Hong Kong Stock Exchange listings are Bermudan listings. So they are already actually pretty signed up to an arrangement which is as you say, pretty inconvenient. But actually, it works for them in that part of the world. And why, therefore, I know this doesn't really address the issues you might want it to, but why Guernsey should be any less inconvenient, given where those jurisdictions are. I don't know. And I rather think that for so long as London is as strong as well it is today, in terms of the amount of capital which ultimately flows through London, and that may just be intellectual capital in terms of the lawyers structuring the new funds that may invest in Russia, they may invest in India, they may invest in anywhere in the world. For so long as that is the case, I can actually still see Guernsey continuing to grow at the rate it has done, for the last 30, however many years. But in the recent past, the growth has been tremendous. In the last 3 years, during apparently one of the world's recession, it has continued.
You've done very good year last year, relative to the other on the side.
Yes.
But it's the morphing that's gone on over that time. To take Ben's point and take it on. And if you looked at a pie chart of what the Guernsey fund industry by asset class or by asset type was in 1990, in 2000, and where it is now, there are seismic changes in the way those asset classes and investor types have changed. And I think that adaptability is still our great strength. And I think it's to recognise the trends and find solutions, which is really what I'm saying is that it doesn't mean that we won't potentially have representative offices or greater in the Far East. But I think there's a consistency about an experience base here that is very, very hard to replicate. And I think so long as we can continue that and make sure we continue to train our next generation through, which certainly at Heritage is something we're pretty obsessive about, of actually making sure you're creating that next generation of people who understand they may have to get on the plane and travel a little bit further, but that the bedrock and the ethics and the whole process of the way we operate is our big strength. And I think talking to, we have funds in the Far East, as do a lot of people, and I travel out there at least once a year. It's quite refreshing because you escape the gloom and doom of depressed Europe, and you find a very different and very vibrant economic environment, which I think is good for the soul. But in that environment, you talk to people in Hong Kong, that staff retention and staff integrity and a whole bunch of other component parts, really hard aspects of, and what you need in this business is consistent. I mean, it sounds very easy what we do. For those of us on the fund administration side, will know that actually it is making those complexities simple and delivering them at the right price is actually quite tough.
I quite agree with you, and we'll come on to your businesses in a second, but I'm going to have one more stab at this, and then we'll move on to another area, because which is, I can quite see there being a heritage office in Hong Kong, Singapore, maybe even in Macau or in Shanghai, Plymore, Benson, Close, whatever, ditto. Could well be that the expertise that you've developed over the decades here will be exported to that part of the world. In fact, I'd be surprised if you don't have offices, one or both of you, and other organisations from Guernsey in a few years' time. But my point is, just to repeat this, sorry if I'm flogging a dead horse here, we're talking about the future competition. I take Ben's point about, yes, the strong colonial Bermuda-Hong Kong connection is ludicrously strong. It's all the expat Scots, by the way. They go interchangeably between Bermuda and Hong Kong, seamlessly. And all of that was, we all know how it was built up, absolutely. And Cayman has a very strong presence, as does the Caribbean overall in the Asia-Pacific Rim. But looking in the future, and again, coming back to our conversation in Hong Kong of a few weeks ago, as you have a new generation of exceptionally bright and capable Asians running Asian companies, and if they are setting up their Asian fund management companies, are they really going to want to come to a Guernsey, or will they actually find their own local domicile solution?
I think they may. I think this is a huge market that's emerging. Guernsey does not have to have global domination for it to continue as a thriving jurisdiction. It is about recognising where our niches are and playing them really well. And that's what I'm saying. I go back to the way we've morphed the industry. We do look ahead, we are looking ahead, and we'll work out where those niches are, and I think we'll do them very well. And there will be space for everybody, I think, and I genuinely believe there will be Asian domiciled growth in the fund business. It would be inconceivable that with the growth that's happening, just stick to China, for there not to be a growth. But I think equally, as you develop wealth, and I was a very interesting seminar a couple of weeks back, which discussed the 3 decades of growth. And the first decade has gone, which is what has China sold. The next decade is what will China buy, and the third decade is what will China own. And I think if you take that view, we're into that phase where what is China buying, and I think as the wealth is created, they will start buying investment products, and it's about, they may well also want to be diversified away from Asia, and from their point of view, Europe looks cheap. So there are investment drivers here, Simon, which I think may well transcend any administration or legal or any other component parts, and we need to recognise that wealth, just as it did after the oil shock in the 70s, flow out of the Middle East into Europe. So that might flow out of the Far East into Europe, because to them Europe looks cheap and it's traditional. And I just think it's about, we've got to be really spatial about the way we look at things.
I think, as with all things in politics, politicians are far more likely to make a lot of public noise about things like, nefarious activities occurring offshore. But actually, from my experience, a lot of the politicians are incredibly well informed about Guernsey's position and respect the fact that actually most of what you can do offshore, and by the way, I think the lines have been blurred between onshore and offshore. I'm not sure. I quite see, in a fund context, that there is a big difference. A lot of what you can do offshore in a place like Guernsey, you can do onshore Europe, onshore America, onshore, in many different parts of the world. So in the fund context, there's nothing nefarious going on. I
know that, but a lot of people don't. I don't know
that. I don't know that's right, because actually the nefarious activities that you allude to about people parking their wealth offshore is not in a fund context.
No, I agree.
It's in a private wealth.
No, but
context.
you could get caught up in that. That's my point.
Yes, to the extent to which we have been caught up in the past, when bodies like the IMF and other international bodies have been visiting jurisdictions like Guernsey, they've come away from Guernsey and said, well, actually, this is an incredibly well-regulated, and I think in an AML context, possibly over-regulated jurisdiction, and we have come out with flying colours. So, so long as those sorts of reports are emerging, and I don't see a change there at all, by the way. I still think Guernsey is positioned incredibly well. Then I think we have an extraordinarily strong future. And going back to, I think it's Patrick that brought up the subject of corporate governance, because I think that's far more relevant actually to the debate in a fund context. Guernsey has, for the 20 plus years it's been doing listed vehicles, has a real centre of excellence in the context of corporate governance. So in a fund context, there is real substance to Guernsey's offering, and I think the greater threat in a fund context is, can it be said in all of the offshore jurisdictions that the business of the fund is really being operated offshore? And I think in a Guernsey context, it is. And it has been for decades. I would be far more concerned if Guernsey was the sort of jurisdiction where, the minded management, the service providers, all the little component parts that make up a fund, that those component parts weren't actually happening here in Guernsey, but that they are and have been for a number of years. So I rather hope that if there is going to be an attack on offshore jurisdictions, actually it's going to be to the benefit of Guernsey, because people may look at their structures in other jurisdictions and say, well, I'm not sure we feel that comfortable about this model and that it works. Whereas if we can move this fund or perhaps set up our next fund in a jurisdiction where we know it's going to be appropriately run from a corporate governance perspective, that Guernsey will fare extremely well, and that may be to the detriment of other offshore jurisdictions.
Or incompatibility with, because I think we're seeing that. I think that's exactly what we're seeing happening, is people have got an existing structure which they recognise has exactly those weaknesses, and it's a relatively easy fix. You stick with what you've got if that's what you're comfortable with and what your investors are, but you just get those core bits that we do very well done here. The board meetings take place here, the company secretarial work takes place here, and the overall management takes place here. That is where I think we've got the biggest positive, and I don't think you can say that about a number. And I'm not into jurisdiction bashing.
No.
I'm just saying, I'm agnostic.
You are making a differentiation between yourself and the Caribbean, though.
I am making a differentiation because the reality is we are relatively accessible, and I think it's important that we continue to have those links, and that we really demonstrate that there is an anchor point. And I say we've just had an appointment just in the last week, which is exactly what Ben's talking about. It's a definite trend, and I think it's one which will grow. That's a risk that the island has always had, and I think we have been innovative and invested in systems, as Joe's talked about. We've been innovative in terms of the Guernsey Training Agency and the related professional bodies improving their training, getting people to be smarter about what they do. I think the focus is therefore on the value added, and I think we could play around with words about what we call about the heavy lifting, but I think there are certain components which are both price sensitive and or expertise sensitive, which you can do off island. It should not be forgotten that in any of these arrangements, the regulatory responsibility sits here.
Yeah, I was going to say, if something goes wrong in one of the inns, Cape Town or whatever, whose fault? Is it Guernsey?
Yeah,
yeah.
Very much so. It's our collar. Yeah, there is no deviation from that point whatsoever as far as the regulator is concerned, and it's subject to very regular and frequent scrutiny. So I think it shouldn't be treated as either a glib or a light solution. It's a very conscious decision. We wouldn't take a view of having something that was 12 to 18 hours away from the office. I mean, our solutions are much closer, and that's something I just believe very strongly in, that I don't want a function being delivered more than half a day away. But as I'm saying, everyone's got their own views.
But just to pick up on the regulatory point, just in case the regulator ends up watching this, they won't allow this to be a shop window. Mm-hmm. Our regulations don't allow the operations in Guernsey to be only a shop window. So unless they back down from a position they've actually had in place for a few years now on outsourcing, Guernsey can never just become a shop window from a regulatory perspective.
I see that, but I agree with that, but I'm just to be slightly naughty and for a bit of fun. Let's just imagine this, whatever. I don't think there is a good term for these kind of funds that you specialise in, the kind of some of the funds that you have in your book of business, the sort of the non-specifically hedge fund or even PE funds, the sort of alternative.
Esoteric is the word.
Esoteric is not even. I didn't like that very much, but
I don't like it either. But I think they're non-correlated.
Esoteric,
and they actually, it's a bit like private banking. It's got overworked.
Yeah. Esoteric is the word.
Esoteric is the right word. They're non-correlated investment vehicles, investing in asset classes that are either new, and therefore one's got to be alert to that process, or they have been around in the private investment sector, and they're now being unitised and brought into.
I'm a great fan of them, whatever you want to call them. I think they've got tremendous.
I am too, but I think over my long and difficult career that I've had, I mean, I can remember looking after emerging market funds, the Merrill Lynch Euro Spain Fund, where Portugal and Spain were emerging markets. This is an ever-changing environment. We took the first fund into India, 1987. This is not something that we've seen. I keep coming back to the decades of experience. It's just that they're changing. I think I've got particularly strong views about certain of these, because there is a difference between a fashionable trend and something which produces a genuine return. And you've therefore got to lift yourself back from it and say, what's the driver to this? The driver to it is pension liability matching. That's what's driving our investment by and large. And therefore, in order to achieve those returns, you've got to have a more diversified portfolio.
Yeah,
and you come therefore to people who can do the unusual and make the complex simple. And that's what experience can do for you. And they are very dangerous markets to start dabbling in.
Just come back to my question, which was going to be, let's imagine there is this great proliferation of esoteric funds. I take Ben's point, which is that the regulator wouldn't allow you to be just a shop window, but just imagine that this really does take off in a very substantial way. And even with the superb productivity and the superb skills of the people here in Guernsey, you cannot cope with it all. And therefore it starts going elsewhere, including to that place just across the water and to all sorts of other places that are considered competitive. I can imagine there being a strong temptation to loosen some of that regulatory strictures to allow some of those funds to have a foothold in Guernsey and have some more of that work done in Canada or South Africa or Northern Ireland or wherever it may be, or Eastern Europe or India. I mean, I would have thought that's very likely, isn't it?
I think it would be very, very unlikely for the regulations to be loosened.
There's more chance of me driving a Ferrari next season than that happening. Yeah. Honestly,
Simon's right. There may be a temptation, but it's you know, the pressure on all regulators around the world is upwards. It's increasing regulations. It's not about reducing regulation. Yeah. And our regulator is very, very hot on outsourcing. We actually play off our differences. We recognise that Guernsey may do things better than Jersey in some respects, and Jersey better in others. But the great thing is that when we're out there talking about Guernsey and Jersey, we are able to offer something slightly different, but yet offer and this is where I think we are already working together, offer the same resource base, because actually our Guernsey work can be done out of Jersey if we so wish. And in fact we share premises in London where the people in the London office effectively work together. So a lot of, and there are a lot of businesses like ours, yes, already working very, very closely together.
Mm. And anyone want to add anything to that? Do you think there's...
Well, I'd sort of raise it above it as I'm a director of the Channel Islands Stock Exchange, which of course therefore means I have to be entirely jurisdictionally agnostic. And I think the two if you're talking about Guernsey and Jersey, which you seem to want to sort of create this civil war, I'm
trying to see whether it can be patched up.
Well, no, I think, you know, both. I sit on that board with Guernsey and Jersey and UK resident directors, and I think, you know, there are opportunities in both islands, as Ben says, and I think, you know, there are two levels of cooperation. One is at a macro level, and I think you can see that with the joint office in Brussels, which I think should not be overlooked.
I didn't realise you had a joint office.
I know you didn't, but I thought it's worth raising. And I think, you know, therefore that's an example where I think, you know, all aspects of business, the financial services business in both islands, feel that's a good idea. One, it's expensive. Two, people don't make that much of a jurisdictional difference between Guernsey and Jersey from a European perspective, and so I think that should be seen as important. But I think the second thing is, even where Jersey draws its business from relative to Guernsey is different. You know, Ben talked about the listed expertise. Over the years, there have been different pockets of business that have gravitated from one island to another, and I think, you know, we just need to recognise that. I think the other point that is worth perhaps touching on in terms of any perception that there isn't cooperation, at governmental level, I'm pleased to see that is increasing, and but it's much more at a domestic level. But if we can solve our health problems of health procurement over two islands, then you start to get to that greater cooperation, and I think it just takes time and it takes a bit of adult discussion, and we'll get there.
I need to get a figure, both in terms of the assets is something you can't control, obviously, but I might ask you for that, but also in terms of the number of funds. Can someone tell me what is the latest figure? What was the figure at the end of 2010, number of funds here in Guernsey?
It's £250 billion.
In terms of numbers of funds.
Number of funds. 1,000. Got it.
That would be a banner headline. No one knows how many funds in Guernsey,
Yeah.
says panel.
But slice this, I don't think anybody's focused on it. It's actually, it's not, you know, this isn't a scores on the doors. And I mean, which way do you want to deliver those
We
statistics?
prefer
I've got it in my computer there. I thought.
Yeah, but only
you guys would have it in your head.
only journalists are worried about the.
I thought you'd have it in your head.
The total quantum. No, I think
All right, percentage. Then let's do it in percentage. I can go back and I can put this in later.
Percentage in terms of numbers.
Percentage in terms of funds, increase, decrease. What are we now? June 2011. Where will we be at the end of this year, and where would you forecast will be at the end of next year? Quickly go around the table.
Percentage increase.
increase.
Well, you could
between
say
now and the
decrease
end of
if
the
you
year
want.
and then next year.
In terms of total numbers of funds, I would say, I don't know, 5% increase. Because you have some you sometimes certainly on the open-ended, you may get some kind of consolidation of different classes. But you're talking about net increase.
Net, yeah.
Say 5%, nice and steady. By the end of the
And
year.
next year.
And next year, probably moving around about the same rate.
That's good, solid,
Steady,
conservative stuff.
predictable growth. Yeah.
I'd say we would be fortunate if that happens. I think there will be some consolidation continue. There are funds that had a wind-up date which has been deferred purely because of the effects of the last 2 to 3 years. So that might flatten out what I think is a much more important underlying trend of new business. So if you were to take purely growth in new business, I think it's going to be above 5%. I think there's some very positive trends, but I think there's a catch-up of maturing which might just flatten out the curve. But I think the other side that perhaps we should perhaps note is the fact that maybe the amounts raised this time round will not be the levels they were 2006, 2007 for new funds. But I think the other bit that isn't perhaps captured as easily in these statistics is new money raised by existing managers, which is definitely on the up.
For existing funds as well,
Yeah.
raising new issues, yeah.
Infrastructure funds have been regularly back to market and raising new money because that's a very interesting asset class because governments haven't got money, and the beauty of infrastructure investment is that they don't have to pay anything for the asset until such time as it's finished, completed and signed off. So from the point of view, you create the economic driver of building a hospital, a school or whatever else, but you don't actually have to sign a cheque for anything to pay for it. And so in these sort of next 2 to 3 years, the infrastructure investment, particularly drawing in external money, could be a very interesting part of the driver of our business.
Yes, the debate on net growth is difficult. In terms of new funds, I'd rather not even try to estimate the number, but I think the increase that we have seen is going to continue, and I think in relative terms it will continue to grow. Guernsey's growth will continue to grow at a faster rate than our competitors. I think we're enjoying a sweet spot, and I personally see that as continuing well into 2012.
Yeah. Joe, last word with you.
I was going to say the more interesting question is how many fund administrators there will be, because that was one of the things we were going to discuss.
We sort of touched upon it at the beginning, we kind of then went off it.
Yeah.
Well, please answer that as well as the other question. How many are there? And there's a
I think
reason.
there's about 50 administrators
50?
listed in LIPA, and I think it's a very competitive market. There's a lot of administrators quite small. We've seen certainly a lot of consolidation in the market. I mean, our own deal, Clement Benson buying Close, is but one. There's been State Street buying NIFA, or Morant's fund administration arm has been JP Morgan buying Schroders. We've got people like Bank of New York Mellon setting up in Guernsey. Sitco is growing its market share in Guernsey. So there's some big people coming in. There's some big firms, or some local firms like Marks, which are growing, and well able to compete with the bigger firms from outside of the island. And I think we're seeing a bit of consolidation. I think we've seen some consolidation in numbers of funds, and I think there's a bit of a survival of the fittest scenario going on with the fund administration industry. So I think potentially there's going to be a fallout with a few smaller ones falling off the end, a bit more consolidation, and the 3 to 5% growth will be shared amongst the 30 to 40 administrators that survive the next 3 years, I guess. So.
Yeah, I think there will always be a choice, but I think Joe's right. I think it will probably sit amongst probably 2 or 3 models. I think there are 2 models I think that are sustainable. One is the larger capitalised custody bank model, and the second one is the sort of more independent managed structure. And I think there's more likelihood of the independent surviving and thriving than perhaps we saw in the Dublin market, which I think, I know you were going to ask the question, so I'll address it. Simply because of that offering of the independence. The IP is not going to go somewhere else. There is a third model, which is one that I don't think is particularly sustainable, which is the lawyer-led administrator. We've already seen one law firm disposing of their administration business, and I just think you saw that in the fiduciary sector a number of years ago, where accountants divested themselves of administrators. I don't think that's a healthy mix, personally, but everyone's entitled to their different views. So there will be changes, but there have always been changes. I'd say change never sleeps, and it certainly doesn't here.